What's up, guys? It's January 9th, 2024. We had a bull trend. Well, we had some sideways price action with bullish pressure, more sideways. We had a small bull trend here. Yesterday was a strong bull trend after the daily EMA finally got touched for the first time in a few months. So you could buy any bar and just hold and you'd make money. It was a really crazy day. Going into today, my expectations were somewhat like a broad bull channel, maybe a range and buy low, sell high, but I really wasn't thinking about shorting unless something drastic was going to happen. First bar of the day, so there's a big gap down. Okay, let me make that white. So there's a big gap down, and bar one is a bull bar. So there's no continuation for the bears. That's obviously a bad sign for the bears, but a good sign for the bulls. I also want to show you, before we get into the first 6 bars of the day. So this is yesterday's high. This is yesterday's high. Yesterday's low. I pulled a fib from the bottom to the top, or top to the bottom, and this is the 50% of yesterday's range. Since yesterday was a bull trend, this becomes a 50% pullback. That's why I wanted to draw this line. This is 50% of last week's range. This is 50% of today's range. Yesterday's range. So now, with that being said, bar 1 is no continuation. Bars 2, 3, and 4 are bear bars, and we can see the selling, but there's bad selling right here. No selling pressure at lows. I think this is more of a dribble from the gap down. It's about 3 pushes down, and that makes a wedge, and bulls reverse the price back to the new high, 2 highs, not a new high. Bears are shorting the strong bull bars, so this could be range-bound price action because bulls bought the lows, bears are shorting the highs. Bar A is a strong reversal bar, and it bounced off the 50% level. I bought this bar because of this, and because of this bouncing off the 50% level. After a strong trend day, the 50% level is rational to maybe look for a pullback into or trade out of. As long as it's being held, don't buy blindly. Like, let it show it's holding, and then you can go for it. This is also a nice pattern by Brooks. It's a failed breakout above, failed breakout below. Bar 1 is 2 reversals, so that's a breakout mode. The market should break out soon, and it did that on bar 8 with another reversal bar bouncing off the 50% level of yesterday's trend. Strong push into the EMA, and we can see resistance here. I think this is where the market starts to get trapped. Bulls got filled. They had some bulls bought right here, we can see, because of this wick, but then the price turned around and went down. They cover and they get out, and then bears get 2 legs down. So leg 1, leg 2, and then on a smaller time frame, leg 1, leg 2. Bar 19 is a strong bar. I took that as a breakout bar, and it breaks through the EMA and through the past 10 bars. It closed on its high, and it's coming off a support level here. This price action, bar 18 and the low of 19, was a double bottom off the breakout of bar 8. So I had this line up all day right here. I had that line like this to add context, to keep myself bullish. So we bounced off the 50% level. We just had a break and retest. Bulls are getting higher lows. There's a bull gap here now. So the market is bullish. Even though you might say, like, oh, that's a big gap down. But a big gap down in a downtrend or a big gap down in an uptrend. Now the previous day's price actions was selling, so maybe this is bad for the bulls because they didn't make a new high. But bar 19 is a strong breakout, bad continuation with bar 20. What is that? Bar 20. Bar 21. It looks like the market's starting to flag above the EMA. All strong closes. Bar 20 printed a bear bar, but it does have bull bar pressure. There's pressure behind here, and it had to close. It almost looks just like 21. 20 and 21 look the same, but one's a bear bar. So I took this as a bull flag. And the market breaks out of the bull flag, goes for a new high of the day, and they get a leg 1, leg 2, leg 3 move. There's multiple ways to count this. We can count it leg 1, leg 2, leg 3, leg 4 fails. We can count it range, fresh breakout. That's kind of how I count it, but I also count it both ways, but I reset my count in my head after a breakout of the EMA. So it's leg 1, leg 2, leg 3 fails. Close the gap, vacuum test of yesterday's high. Where was I? So yeah, so the market gets a flag here and breaks out and creates a new flag. You can see bar 27 tests bar 22 high and reverses, and bar 28 is the smallest follow through bulls need. It's just the one tick bull body. That was bar 28, excuse me. Bar 29 is a strong breakout of the second flag, and it is a strong close. I think this is strong enough to get its own second leg, and it did. Bar 30 is getting close to, we're filling the gap. I think the market's trying to test the high. The bars are getting bigger. We're getting higher into resistance. The trend is getting more climactic. We can look at the pullbacks from here. If this reset, this is the first flag. Look how small this pullback is. Second pullback grew a little bit bigger, and then the third pullback was deep, and it was climactic. The market races to the high of yesterday, and it closed the gap. So now the bear's gap that was open in the morning is closed, but this was a pretty nice play right here. Bar 44 is around midday. This looked like a 2-bar reversal. And you go leg 1, leg 2. I didn't measure this. I was done trading for the day. The only trade I took today was I bought this low and I held for a swing into here, or it might have been here. One of the two. Bar 44, leg 1, leg 2. But I wanted to measure it out because, is the word asymmetrical? A leg 1, leg 2 that is not symmetrical can end soon. And I didn't measure it at the time, but I just could eyeball that this leg was bigger than the first leg. So I wasn't too keen on seeing a big continuation because we want symmetrical legs. I was just watching the markets. Bar 50 looks like a good buy, and it's bouncing off the bar 28 breakout. So just how we played bar 18, this looks like a break and retest. Deep pullback, 2-legged pullback into support, the 28 right there. And they go for 2 legs up. And one thing I'm trying not to trade as much, and I want to just make my 250, 500 for the day and just watch the markets, listen to the traders in the trade room, and soak up as much as I can. I was thinking last year I was trading and I was in the trade room at the same time, and I really missed out on focusing on both things. So this year I'm just going to trade, finish real quick with 5-10 point scalps, and then study and then see what happens next year. I think that's the best way to soak up the markets, because for the first time I pay attention a lot to the gaps within the trend, but then I was like, you know what, there's a bear gap here, right? And I was thinking, okay, the markets are range bound, gaps get closed, we can buy this to a target within this box. And look, the market vacuumed up to the gap, and now the bulls have a gap, and then look, the market vacuumed down into the bull gap. So in range bound environments, the market closes gaps, and in trending environments, the market keeps gaps open. And I always caught that with the trend, but not with the gaps. And it was really cool to catch that today. And I think I only caught that because I wasn't hunting for a trade. Usually I would take this trade, target recent highs, and then have to get out at bar 57. So I'd lose about 5 points. But then seeing yay, maybe the gap is the target, not necessarily the high, but the gap. That's exactly where the market vacuums to. Then bears fill their gap. Vacuums down to this gap right here, bar 52 gap. It gets closed, and the market just goes into a triangle for the rest of the day. After the big move up, big move down. I'm going to start deleting these. See, the market's just range bound within this triangle. It's shrinking. And that big move up, big move up, big move down, big move up, big move down, and the market just went range bound into a very tight range. Really hard to make money. I hope you guys didn't get caught up, trying to chase the breakout. This is a range-bound environment. We can see that because the gaps are getting closed and bulls are buying the lows here, and bears are shorting strong bull bars. Failed breakout at yesterday's high. Would have been great for the bulls to get continuation, because on the daily chart it doesn't look too friendly now for the bulls. I think that's really bad continuation for them right here. So this was yesterday's bar, a great looking bar. And then we have this bar, no follow through, no close. It's given a double bear flag, double top. But there's so much momentum with this bar. I do think something will happen. Maybe we get like this. Maybe it goes like this. I think this bar deserves its own leg too, and I also think these bars deserve its own leg too. So it'll be interesting to see how that plays out. we still have a lot of bullish momentum from leftover from a few months ago. We can see all the bullish momentum on the hourly chart right here. It looks like a wedge bottom, strong push up. This is like a broad bear channel. Hit the lows, double bottom, and a breakout. And now we're seeing the hourly chart actually looks all right for the bulls. This doesn't look too good. I definitely think they want to start seeing some strong closes. But yeah, I think this is strong enough to get a second leg. I think this is strong enough to get a second leg. I'm trying to focus the workouts, the breakdowns with breakouts of market structure breakout around the EMA and leg counting, because I'm almost positive if we can just learn how to leg count successfully and learn the market cycle, as Brad repeatedly says, we have to learn the market cycle, then we can structure trades accordingly, you know? Like, it was just, he's laying it out for us. I mean, if you guys haven't heard, he's doing courses every week on Tuesday, so definitely check it out. It's on the Al Brooks YouTube channel where Brad teaches it. Most of you already know who Brad is, so check him out. He's going to be doing market cycle teachings. It's for people who have already done the course. I've already done the course, but I'm just going to do it again because I want to do the course while it's being taught by Brad. So check it out if you guys are interested in learning this stuff. It's on the YouTube for Al Brooks, just YouTube Al Brooks. I hope you guys are learning. Hit the follow button. Hope you guys are having a good year. My account is not red, but it's not green. It's flat. It's literally flat. So I'm just going to take $250 out, $5, 5 points a day, and see what happens. It's 5 points a day. The $250 for 12 days is 3,000 something bucks, and that's what I need to make. So I'm really gonna focus up, trade a very specific time of the day. I'm gunning for not trading the first 30-40 minutes, and I'll trade for 2 hours and just call it. That's where I've been making my most money. So definitely encourage you guys to look if you can. Performance does not equal time in the markets. I've heard Brad say that before, so think about that. Do some homework, do some studying. It's the beginning of the year. Hope you guys are doing good. I'll talk to you guys later. Bye.